So, it's an official yesterday, the UK is official, we went into a recession. So let's just clarify a few things at the moment. So to go into a recession, you have to have 2 negative quarters of growth. So Q1, as in the first quarter of 2020, the economy in the UK contracted by just over 2%. So we had a 2% drop in basically the economy, Q1. And in Q1, the reason we had the drop was all around everything that was happening at the tail end of 2019 around Brexit. And Brexit finally got pushed through, and it was confirmed that we are going to exit Europe. So because of all of that, the economy kind of contracted at the beginning of Q1. That's why we had a little bit of a negative growth by 2%. Now Q2, we're down just over 20%. I think it's like 20.4% that we've dropped. Now here's the thing about that. That is not because the economy contracted. Of course it did, but that wasn't the reason we went into a Q2 20% drop. It was because of the lockdown. The economy basically just came to a standstill. So we're going to talk about that. Now, this is the thing that doesn't sell newspapers. It doesn't sell, headlines. If you think about it, the media is trying to consume us. And a question I always ask people is that if you did not watch the media, you did not watch the news, you did not read the newspapers, you weren't subscribed to notifications on social media from all these news outlets and magazines who are trying to fight for your attention with clickbait. If you weren't listening to all of that stuff, then this whole idea of what's happening with the coronavirus and everything else, it wouldn't be as dramatic as it is right now. We would just get on with things and understand, sure, there's an element of severity there where people have lost their lives and all of that kind of stuff as well. But it's the media hype that's really making people be afraid, living in fear, panicking, not knowing what to do. And it doesn't help when the government's doing a lousy job to lead with a clear plan and what we should be doing, and we've got no idea whether there's going to be local lockdowns, another full-blown lockdown. It's just fucking crazy, right? And right now, as of yesterday, you should have seen all the headlines. All the headlines around, the UK is now in a recession. It's after 11 years. We've dropped 20.4%. We're the second worst. The only one that's worse than Europe against us is Spain. And, what's that going to mean to the UK economy? And it's all doom and gloom. But then if you read some of these articles and you're starting to look at some of the different, economists out there talking about the economy and what's happening just now, Q3 is already showing an 8% growth. So we're already showing that, sure, we dropped to over 20%, 20.4%, but we've increased by 8%. So that doesn't sell newspapers, does it? That doesn't give you good media headlines. Well, it's not really 20.4%, it's actually like 12%. But they don't tell you that shit. Why? Because that's not going to sell newspapers. That's not good headlines. So this is going to be a short-lived recession. It's the real recession that's coming that everyone should be concerned about, and I'm going to talk about that. And I'm going to talk about what's going to be the trigger point for that up and coming, like real, proper, long, hard depression. Not really a recession. We'll talk about that in a moment. But let's talk about what's happening right now. So Q3, we're already seeing 8% of growth. And that's because, the economy's starting to get stimulated again. If anything, the UK government, and I give the UK government a hard time all the time, especially being a landlord, a property investor and developer myself, with all the different taxes, the different, things that they're hard on us landlords and us investors, all right? And not just us, people with their taxes and a whole bunch of other things as well. So I can sometimes be hard on the government. However, the stimulus package that they've put together, without that, there would be way more businesses in catastrophic conditions and states, in dire states, if we never had the CBIL loans, the coronavirus business interruption loans, the bounce back loans, the different grants and different stimulus packages that's assisting and helping, and the furloughing process that's going to be helping with supporting, staff that are not able to work and all this kind of stuff. I mean, they've really pumped in so much money to really try and keep the economy going. And now that, if you think about it, during the lockdown, money didn't disappear. You need to understand this, money didn't disappear. It just wasn't getting stimulated into the economy. It wasn't exchanging hands. It wasn't, you were no longer spending money as such. You weren't able to go out there and spend and all the things that most people take for granted. And that's what really, basically halted the economy. So that money didn't disappear. And then the government goes and pours all this new stimulus package into the economy, and it wasn't getting spent. And now with the phased approach of coming out of lockdown, the economy's starting to get kick-started a little bit, stimulate, and more money's starting to exchange hands, and that will start to really, probably over the next few weeks, couple of months, hopefully all goes back to some sort of normality where money's starting to exchange at a more rapid rate, which will then show Q3, quarter three, as growth. So it means round about, October time, it will be announced that we're no longer in a recession, right? And then Q4, I reckon, will still finish relatively strong as well. Why? Because we've got Christmas coming up, and most years, Christmas is a year where, or the period where more money gets spent in the economy. Shopping, buying lots of gifts, and everything in excess and so forth. So from that point of view, a lot of sales, a lot of, offers, and, coming up for Boxing Day sales and everything else, and you get the January sales. So all of this stuff here is really going to help stimulate the economy. However, I need to throw a little caveat in there, is that we've already seen here in Scotland, Aberdeen get into a local lockdown. We're seeing certain things, I'm not sure if it's a full-blown lockdown in Manchester or certain locations. And there's been other cities where there's basically saying, hey, we might go into another local lockdown. Now, if there's too many of these local lockdowns happening, and what ends up happening is a full-blown lockdown, as in the whole of the UK again, or Scotland or England or whatever it may be, if that happens again this year, and there's a real chance that that might happen, especially in the winter months, because in the winter months, that's when more people, become, start catching the common cold, or start getting little bugs and stuff, and maybe the coronavirus might come back, in a bit more full force. So we need to be aware of that. So with that in mind, there's no guarantee that we're not going to get through this year, and especially starting next year, without another lockdown. That's very real. And again, you don't want to be consuming too much of the media, because the media is really consuming your mind, that most people live in fear of, what do we do? Do we just stay in our fucking house and do nothing? But this is very real, and if we do go into another full-blown lockdown or too many local lockdowns, that will halt the economy a little bit. And if that does happen, we might see Q4 not seeing the growth and the growth that's expected, and we might end up having a negative Q4. But you need 2 consecutive quarters of negative growth, depending if that lockdown lasts into the beginning of next year, or if it happens next year, will depend if we end up getting into another recession. Now, there's been so many countries across Europe, Italy, Greece, and Spain, Germany, Switzerland. There's been many countries across Europe who have gone in and out of a recession over the last number of years. But most people don't hear about that. But it's a very different recession of a couple of quarters of contraction of negative growth to a full-blown recession where it's consistent negative growth over multiple quarters, over multiple years, which the knock-on consequences of everything that's happening right now is going to play out. So let me explain what I mean here. Let me try and help you get this, because it took me a while to wrap my head around this. So the best analogy that I can explain here is, imagine today, if you eat healthy today. You have a nice healthy breakfast, you have a nice healthy lunch, healthy dinner, you've had a real day where you've eaten just under your calorie intake, so you're in a small deficit, and you've ate, nutritional food, all great food, drinking plenty of water. If you eat healthy and everything for one day, that doesn't mean you're going to be in great shape, be fit, full of energy tomorrow and in a year from now, just because you had one healthy day of eating well and working out and all that good stuff. Likewise, if you have one bad day where you eat lots of junk food, fried food, and takeaways, pizza, chocolate, ice cream, sweets, and you just binge and eat excessive calories, doesn't mean tomorrow you're going to wake up overweight. You'll probably wake up with a food coma, a food hangover, but it's not like a year from now you're going to be, overweight because of one day. But we all understand the consequences. We all get it and understand that if you eat healthy daily, consistently, over a longer period of time, chances are a year from now, because of those actions you've taken of eating healthy, just consuming the right amount of calories, being in a little bit of deficit, working out and burning more calories and exercising, that you're going to be in good shape, have more energy, feel fit, and have, good food choices. Likewise, if you consistently over longer periods of time eat unhealthy and don't exercise, you're not going to, like what you see in the mirror. All right. So we need to look at what's at play just now in the economy. So many businesses were coasting pre-COVID. And when we went into lockdown, this is where it was a wake-up call for so many businesses that were just coasting, taking it easy, never had cash flow strategies. They were already on thin ice as it was, and something like this really tipped them over the edge. We've already seen some big names go under, and that's not going to be the end of it. We're already seeing, I know many business owners who have shut the doors. Their businesses are now no more. They don't have cash flow to cash flow through this. And then the worst part's going to be is that businesses that are struggling to cash flow through this, if there is another lockdown, how else can the government continue to print money? They can only print so much based on the country's output, their GDP. They can only print so much. They can't just keep on printing. Every country is designed like a business, and depending on how your economy is, allows you to print X amount of money. And we're already at the limit there. There's not much more that we can do. Interest rates are already at 0.1%, so it can't get any lower pretty much. So with all this in mind, another lockdown is going to tip way more businesses over. And here's the knock-on consequences that we really need to understand is next year, what about all the businesses that don't pay back their coronavirus business interruption loans, or at the end of 12 months of interest free, and now need to start paying their capital and repayment back, which could be the tune of thousands of pounds a month, and they can't afford to pay that back because the business has not went back to the levels it was. What about all these people who just randomly took bounce back loans and just, self-certified that they could earn X amount and took 50 grand bounce back loans when they've been trading for fucking 2 months, and they've just lied on an application to get a bounce back loan? They're not thinking about the knock-on consequences of having to pay that back 12 months from now. What about all these, basically everything that they're basically taking from these loans, deferring their VAT until April next year? You should not be spending your VAT, but I can guarantee you so many businesses will cash flow themselves through spending VAT money. So many businesses who have deferred paying their corporation tax, they're going to be cash flowing themselves through their corporation tax, which again is just going to have a knock-on effect. Self-employed people who can defer their tax till January next year and their July payment till January next year, not paying and deferring that. And what happens is they can't get cash flow coming in, they can't get new business or whatever it may be because of everything that's happening. This is not every business, but a lot. Then the knock-on consequences are can't pay their VAT, can't pay the corporation tax, can't pay their personal taxes, can't pay back the loans and everything. And you're going to see through 2021, through 2022, many businesses folding and going under. And the knock-on consequences, all these banks who are literally pouring out hundreds of millions in all these loans that do not get repaid. Hopefully more do, but there's going to be so many that don't. The government already owns most of these banks through the last recession. So what's going to happen? You're going to see fucking major banks failing. And this here is going to be the knock-on consequences of everything that's happened here that no one can see. Unless you can look at, if I eat healthy consistently over a longer period of time, this is the results that's going to happen. And this here is the results of the economy. You're going to see record levels of unemployment. You're going to see crazy shit happening. Like crazy. So if all of this doom and gloom and disastrous fucking, shit that's going to be coming, and the only way that we can, I reckon that the real recession that we are going to be concerned about, everything I'm talking about, is going to be probably middle to late 2021. Potentially, it can either be pulled forward or pushed back. Pull forward with another lockdown, or push back if the economy continues to be stimulated with more spending and everything else that's happening. And there's a lot of stuff happening in the construction world to try and stimulate there, because if there's more construction getting done, there's more work getting done, there's more little micro economies getting built, because if a new development of 200 units goes in at a certain location, not only does that create a lot of jobs and it creates a lot of stimulation in that local economy and so forth, and we're under constructed already. We're over 250,000 homes short every year in terms of the housing shortage. So the government try to do so much to stimulate more construction, more development and everything else. So depending on what they can roll out and what they can assist under all the circumstances through next year may prolong the main recession that we're talking about. But with businesses failing left, right and centre, more unemployment, that's going to spiral things at some point, either late 2021 going into 2022, or with a lockdown again and more things, it might bring it forward. So if you're staying tuned into my content, listening to what I'm doing, I'll keep you guys up to date. Alright, I'm keeping a pulse on the market. I've got phenomenal advisors around me that I'm talking to on a weekly basis. I don't just read the fucking news. That's the last place I look at. I'm not looking at buzzwords in the media and what things people are just, clickbait shit. No, I'm listening to economists who study this, who understand cycles, who look at cause and effect, look at all the different factors. They look at everything, look at different economies, different countries, and how they're all interlinked and how it affects things. And sometimes I listen to conflicting advice, and I'm like, oh my God, who do you listen to and what's going to be right? And one thing is to be true is that no one's got a crystal ball, but there's enough indicators, enough factors for all of us to start to become aware and be able to see. A lot of things are predictable if you can see the jigsaw, not just all the pieces, but you can see the jigsaw and you can start piecing things together, and things start to make sense when you're viewing the economy. So with all of this here that's coming, how do we see the opportunity? How can we take advantage of a bad situation? How can we make sure that we are not a statistic? And how can we make sure that we can thrive through this? So let's talk about some of my top tips to thrive through a recession. Because right now this is a short-lived recession. We're going to bounce back out of this. And then at some point in the near future, 2021 going into 2022, it could be a long, dark depression. And it's probably going to be something that we have never seen in our lifetime. So with that in mind, how do we prepare through all of this? Well, first and foremost, you've got to get educated and get the right knowledge. I'm not talking about just in property. There's a lot of people that follow my business page here who have got no interest in property. We're going to talk about property stuff specific in a moment, but so many people on here just want to know about from a business perspective and a business point of view. So from this point of view, it's about getting educated to make sure you're running your business well, to make sure you've got the right cash flow strategies, to make sure you've got the right marketing strategy, to make sure you've got the right systems and procedures in place, to make sure you've got the right staff, not overstaffed, the right key staff, performers. The first people who are going to keep their jobs are those who are going over and beyond and above just being paid. So if you're an employee and you're watching this and you're like, Paul, what about me, and is my job potentially at risk? Well, everyone's job's potentially at risk, but how can you go over and above and beyond just being a typical employee doing your day-to-day job? How can you give more? And you might turn and say, well, I don't want to give more, I want to get out of my job. Well, guess what? All the more reason to get educated on creating wealth, on getting involved in property and investing, or whatever it may be for you, setting up your own business right now. You might think, oh my God, setting up my own business in 2020, when we've had the global health crisis that's had a knock-on effect on the whole economy, and you're talking about like a deep recession that's coming. Well, what better fucking reason to get yourself set up so that you know the only person that's going to save you, my friends, is you. The only person that's going to save you to make sure that your bills are paid, to make sure you can put food on the table, to make sure that you're not relying on anybody to tell you if you've got a job on Monday morning or not, to make sure you've got enough money to live, and not just to live, but to enjoy life, so you can actually have a good time and be able to go on holidays and still do all the normal shit and have fun and expand and grow. The only person who's going to do that is you. So, it's all about being ahead of the game. COVID and everything that happened this year here was a wake-up call. That was a unicorn. That wasn't supposed to happen. That came out of nowhere, and it really shook everybody up. And now is your opportunity, and it's a real opportunity to not be caught sleeping when the real recession hits. I'm not talking about what's happening right now. What's happening right now is so insignificant in the grand scheme of things. I'm talking about what's coming. You've been warned. And I'm not talking about me warning you. All the fucking indicators are there. You have been warned, my friends, that you don't be caught sleeping, and from 12 months from now, you turn around and go, I wish I listened to that little fucking guy, Paul McFadden, on that Facebook Live, when he started talking about all these things that were going to happen, and they're starting to happen and so forth. I should have listened to him a year ago. Get started now. It's about being ahead of the game. If you've ever wanted to get started in a business, now's the time to do it. Getting access to finance and funding is still relatively easy right now. There's a lot of money in the marketplace, a lot of people keen to invest, but more importantly, from a property point of view, you're in the right place. Because one of the questions that a lot of people say to me, well, Paul, should I be buying property right now when we know that we're going to go into a recession? Should I be buying property? Should I wait? Well, let me just touch on a few things there, property specific. Let's look at stocks and shares first and foremost. If, when COVID what happens? Stocks and shares just drop like a lead balloon, right? And in the next minute, they announce there's a new vaccine, then boom, right? Stocks and shares increase again. And then it just takes a soundbite. It just takes some sort of clickbait, some sort of Elon Musk, who goes on the Joe Rogan show and then lights up a spliff for then Tesla and SpaceX's shares to drop. It just takes a stupid fucking thing like that to show how volatile stocks and shares are. They go up and down, so volatile, it's all about news bites, right? Now, when it comes to property is slow to drop in value. So let me explain. If you've got 10 properties all lined up in the same location, and they're all like for like, and let's say they're all worth £100,000 each, right? Like right now, it's still a seller's market. It's a seller's market because of supply and demand. There's not enough stock on the marketplace. I'm not talking about what we teach at Protégé. Like, we're doing property Protégé right now in our office in Glasgow, social distancing measures and all that stuff in place. Today's day 2, we've got day 3 tomorrow, and today we're talking about all the market strategies to show you how to source off-market property deals. That's where you get the best possible deals. But when we look at what's on the market right now, it's a seller's market. So generally, when a property is on the market, it's selling at market value or way over market value. It's basically doing as it was pre-COVID right now. I've sold a number of properties in the last few weeks, way over home report value. Why? Because the generalization here, for every one property on the market, there's like 10 buyers. So the seller can wait for the best possible offer before they accept that. Now, what we need to realise is, let's say you've got those 10 properties, they're all worth £100,000, right? And let's say one property, there's a motivated seller, they want to sell the property because they're in some sort of financial difficulty, maybe they've lost their job, and they sell that property for £70,000. I'm just making numbers up here. Just because they sold that for £70,000, it does not mean the rest of those properties are now worth £70,000. It does not mean that. It's just one property sale. Just like if one property sold for £150,000, it doesn't make all of those properties now worth £150,000. It was one property. But when there's a number of comparables and a number of sales, so a property now sells for 90, another one sells for 85, one sells for 87, one sells for 92, one sells for 88. When there's enough comparables and surveyors look at it and go, well, there's not been £100,000 sale for quite some time and there's been enough sales, the property's now worth 95,000. Maybe it's worth 90,000. But that doesn't drop overnight like stocks and shares. That has been over like a 6 to 8 month period of multiples of transactions before it goes down. And we've got no, like, we won't see that for quite some time right now because it's still a seller's market. Supply and demand is what controls everything. So then what happens is there'll be a time where properties are now selling at 79 and 82 and maybe 84 and da-da-da. And this might be another 6 months later. So with this in mind, I always say you don't have a property business if it's cycle dependent. You need to know the strategies and how to buy when the market's going up, when the market's plateauing, and when the market's going down. Unless you don't have a business. You need to know how to operate and what investment strategies in all cycles. So you're always making money every year in business. So with all of this in mind, the good thing about property as an investment, if you've got core understanding, core business principles on how to source the deals, how to structure the deals, how to negotiate, how to finance the deals, then from that point of view, you've got nothing to worry about because you've got plenty of time that you're not going to get caught out if you're doing your right due diligence, which is important in mitigating risk. And with all this in mind, you've got time on your hands. 2008 recession, it wasn't like property prices just dropped overnight. Property prices bottomed out at the end of 2011, beginning of 2012. That took like a good, 3 to 4 years before property prices dropped to its bottom levels. So this recession, forget about it because we'll bounce back out of this. Then we just need to keep an eye on what's happening with local and wide-scale lockdowns again. And then with everything of the knock-on consequences of everything that's happening just now, unemployment and so forth, and we may go into a fully blown recession at some point 2021, potential 2022, depending on how much they try and stimulate the economy and so forth, and how much Brexit, when that actually physically goes through, which unless it gets delayed and stuff, may have some impacts. So with this next year, and we actually go into, whenever that is, next year, the year after, it's not like property prices are going to drop like that. It's going to be probably into 2024, 2025, 2026 before property prices are at bottom. So you're tasked with two things. One, you wait until then, but you've missed the fucking point of you make money when you buy, and it's all based on having the right investment criteria, and it's all based on knowing when you buy when the market's doing this, when the market's doing that, and when the market's going down. You're always making money in any market cycle. And once I drill that into someone's mind, you won't be sitting there going, oh, I'll get started in 2026. No. By the time you wait for then, there's other people who have grabbed that opportunity and took advantage of that, have big portfolios, and they don't even feel a recession. Why? Because they've got money. They're building a portfolio. They're doing lots of deals. They're creating wealth. I mean, for me, through 2008, I was already fucking broke. I was already poor. I grew up in a single parent household, see my mum struggle so much. So I never felt the recession in 2008, 9, 10. Didn't feel that because I already never had money. But I tell you what, my experience when I started to make money and things started to really grow and the business started to build and I was able to start creating wealth and everything, I'm no longer worried about things. I'm not worried about what's happened with COVID because I'm able to cash flow myself out there. I've got assets that look after me and all that good stuff. So you can't be caught sleeping. You can't. You've got to understand and know what's on the horizon. It's cycles. We are long overdue a recession. I'm not talking about what we're in just now. Forget about that. This is just a speed bump in the grand scheme of things. I'm talking about a proper recession. There's another thing, which is the 90-year cycle. And what happened 90 years ago, there or thereabouts? The Great Depression, which very few people will even remember. We won't remember this. Anybody watching this, you won't remember this. But we're due a depression, a 90-year cycle in our lifetime. And you've got two opportunities here. One, you become a statistic and you basically go through this and feel the struggles and difficulties and everything that comes with it. Or you decide to plant your flag and go, do you know what? I'm going to fucking do everything I can do in my power to make sure that I'm not a statistic, to make sure that I'm going to be creating the business I want, get involved in property, or really adding value to the marketplace to make sure that I am going to be someone that's going to be desirable for an employer, because it's not like the whole world ends. Things will still continue to go, but there'll be catastrophic events happening all over the place, from big institutions failing, big companies, banks, you name it. And the one thing that we've got right now as a great thing that was different from 2008's credit crunch right now is we've got so many more challenger banks, private equity firms, more private lenders who are all coming into the marketplace. So there's never been so much lending and alternative lendings than there was pre, recession 2008. So with all this in mind, we've got a great opportunity to really thrive through this if we make some very clever decisions and getting the right knowledge, getting the right support, surround yourself with the right people, which is so fucking important. Dumb down the news and all the fucking fear and scaremongering, making some wise investment decisions, and more importantly, get that edge, get ahead of the game. It's important. And the most important thing of all of this is get yourself a cash flow strategy. That's so freaking important. You've got to have a cash flow strategy so you're able to get yourself through all of this. This is exciting times. As Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. So from this point of view, it's time for us to prepare to be incredibly greedy when everyone else is fearful, to make sure that you do this not only for you, but to support and assist and help your family as well, and then your wider network and everything. I'm so excited about the opportunity that's ahead of us, and it's up to us where we want to position ourselves to make sure we take full advantage of that. The real sad reality of it is that we're going to find so many people in a situation worse than it was 2008 in terms of people losing their houses and so forth and everything. It's going to be catastrophic. And some people turn around and say, well, what is it with you landlords? So you just go out there and take advantage of people? No, they have to sell. They've got no other option. And you can structure a deal that at least doesn't mean they get repossessed, or at least doesn't mean that they lose everything. I'm not saying you have to go in there and just take everything off everybody. You need to do it ethically. Tomorrow, part of Protege, we're going to be teaching negotiation, and it's all about creating something that works not only for the seller, but works for you or your investor as well. And one more thing that I just want to touch here. We find ourselves right now, just now in August 2020, something that never happens. Never happens. One, we have a seller's market. So right now, house prices, again, just as it was pre-COVID, is now selling at market value or over market value still. So you're still getting a premium. You're still getting that premium when you're selling property. And guess what? Right now, which doesn't ever happen, simultaneously, you've got more motivated sellers than pre-COVID. Why? Because there's so many people who have been put out in furlough and have been told they don't have a job to come back to. There's so many, SME, small business owners the businesses have failed. There's big businesses failed. There's so many layoffs happening. So already there's way more motivated sellers than there were pre-COVID, and we've got a crazy marketplace that you've got motivated sellers and you're still getting a premium because it's a seller's market. It's not until the market gets flooded, and there's no sign of that happening anytime soon, that changes. So on that note, hit me with any questions that you might have. I'm happy to spend maybe 10 or 15 minutes before Alexa arrives, and then we're going to go for some food before we finish up for tonight, and tomorrow back in for day 3 of Property Protege. I hope you guys have got my book, Property Success Mindset, because that mindset side of things, when it's in property, it can be translated into business and life. That's going to assist you and help you get the right mindset. It's so fucking important to make sure we've got up here right, so we can feed our mind with the right information. It's going to help us going forward. Let's get prepared. Let's get prepared. And also, if you've enjoyed this Facebook Live tonight, maybe share it. Maybe, get out to your network. That'd be good as well. Kai, what can we do now to prepare then to be ready for what's to come. Kai, have you just switched on the Facebook Live and been sleeping from everything that I've just said? Oh my God. Be ahead of the game. Get yourself educated. Get yourself a cash flow strategy. Don't sit there and twiddle your thumbs and wait. I mean, I can sit and go through all of this stuff again. And what's your thoughts on inflation and lack of lending from the banks? Where are you seeing lack of lending, Kai? There's never been more lending than right now in today's day and age. There is so much fucking lending that is frightening. It couldn't be easier to get lending. So I'm not sure where you're seeing lack of lending. My experience is that there's far too much money out there and there's still a lot. So keep that in mind. Dave, what's the best cash flow strategy to use now? Well, it depends. If it's property specific, I would be focusing on property deal trading. You know, that's one of the big focuses that we had today at Property Protege. We're teaching everybody, like you have learned yourself, Dave, is how to package up deals, how to trade property. This is property deals that you don't want to keep yourself. You can make upwards of £7,500 per property trade on deals that you don't even want. So if you were just trading one of these deals every 2 months or every 3 months, you know, that's like the equivalent of £2,500 a month if you trade one deal a quarter. If you end up doing one deal a month, that is phenomenal cash flow. So keep that in mind. Anna, what's the best way to find investors as a deal sourcer? Yeah, so today we had a big focus on marketing at Protege, talking about dealing with preferred investors. And what's the best way to find them? I mean, you don't want to be sourcing deals for investors. You want to be sourcing deals for preferred investors. A big difference. You make more money working with preferred. What's a preferred investor? A busy working professional who earns a good living, who wants to build a portfolio and needs someone that's got the expertise and knowledge that can build that portfolio for them, who don't have the time and luxury to go and do this stuff themselves. So think about people that might be time poor but have the funds and want to build a portfolio who need your help. Dan, nothing to do with tonight. Are you still thinking of doing the Facebook subscription lives? Dan, I am thinking about doing that. I've just got a million and one things on the go just now. We're working on some unbelievable developments ourselves, really heavily focusing on the retirement village space because they're recession proof. There's a huge demand there. So with all that stuff going on and working on my own personal developments and doing our own trainings and everything else, I've not yet rolled out what that will be. So sometime in the near future, we'll probably do something. James, what sources can we tap into rather than the mainstream media? This source here. I have lots of different sources, and I recommend that you do a little bit of research, look for some economists as well. The reason I don't share my own ones, and I don't mind that, is because there's a lot of conflicting information. So even the things I'm saying tonight, even though I'm pretty sure on all of this stuff and I've got my own thoughts on things because it's cause and effect, it's knock-on consequences of things, I take in all this different information and I'm not biased to anyone. You know, confirmation bias is something that we need to be careful that we don't fall into that trap. You know, we're all in with this religion or this belief, or we want to vote for this person. And you're all in, and confirmation bias will back up everything with your beliefs. So what I do is I don't go anywhere to the extreme that I then miss out on other things. So I take information from all these different economists, different market experts, different psychoanalysis and everything else, and some stuff's conflicting, and I take my own experience and knowledge of business and keep my pulse in the marketplace and make my own commentary. So with all that in mind, that's something that I recommend that you do too. Tanya, totally agree. Ellie, it's manic out there. Dean, had to buy your book twice as I left mine at my nan's in Essex. Well, at least your nan's got a copy of my book as well. Hopefully she reads it. David, I've been advised that BMV deals are basically non-existent at the moment. Can I invest in a buy-to-let paying home report? David, you've been advised. Whoever advised you... Oh, God, let's keep it clean, Paul. There is so many below market value deals out there. It's unfucking believable. Like, you should have seen the wins that our Protege community were sharing in our group on Friday. It's not all about finding and buying the biggest BMV deals. It's about where can you add value, and where you're going to get your best deals, David, is offline marketing, is off-market sales. Dealing with motivated sellers, which they are in abundance right now. If you're looking on the market, of course there's going to be a shortage because it's a seller's marketplace. A deal. So you're saying that there's still BMV deals to be had, even though you mentioned it's a seller's market? Yes. If you are sourcing off market, you can still get great deals on the market, but there's like 100 times more sellers selling off market than there is on the market. Sellers who don't have the luxury to sell with an estate agent because they don't have the time or the money to do so, or the house is in poor condition and they don't want to list it with an estate agent because they don't want people to see the condition their house is living in. There's many reasons why people would sell off market. The reason I ask is you always say only buy at BMV. David, you may have a problem. I don't have that problem, and none of my proteges who do the marketing that we teach have that problem either. So you guys you don't know what you don't know, so keep that in mind. You've got to get your marketing, just like any business, and this is one of the things I said at the start of this call, part of getting ahead of the game, investing in your education, getting the right knowledge, getting the right people around you, start to knuckle down on your marketing so you're really getting your target audience, your target markets in any business, so you're going to have cash flow. Aside from property, what assets can you recommend to further strengthen your cash flow? Property. Stop asking for something else when it's the number one fucking investment you could possibly make or do. If you really want something else, then a business like property deal trading, or something else like a business that you can go and sell a product or service for higher and gives you profit margins, right? Simple as that. Jonathan, are there any methods of lease options we can use in Scotland? Yes, delay completions. Jake, if the market was to crash, would you suggest keeping property, and how long would things go back to normal? If the market was to crash, would you suggest keeping property? So it's all about making sure you buy with the right investment criteria. Everything I teach is about getting the acquisition cost to buy a property. You want to buy right, so you buy at discount. It doesn't need to be a huge discount, some form of discount. You want to add significant value for your renovation or refurb, and you want to make sure you're buying based on your investment criteria, such as buying for cash flow and buying that you can refinance and get all your money out. So if the market does crash, and remember what I've been saying, it doesn't change overnight, you've got your money out of the deal, so you've got none of your own funds at risk. So it doesn't matter if the property value drops by 30%, it doesn't matter, because all your money's out. And the debt is still being serviced by your tenants paying their rent. So the lender doesn't mind, and then property prices will go back to normal and above in maybe 7 years, 10 years, whatever many years in time. Matt, how would you advise doing buy to flips in a limited company or in your own name for higher tax payers? Well, the benefits of doing it in a limited company is you don't have capital gains to pay, because you just pay income tax and corporation tax based on the rate there, so you can offset so much more. So if you're only going to do one flip or two flips, you might be better doing that in your personal name, because you do have capital gains allowance, and so does your partner. However, if you're going to do a lot more than that, then it makes sense to do it in a limited company. Malcolm, so you consider there will continue to be plenty of motivated sellers out there, e.g. people panicking, job change. So you would consider there will be, I'm not considering, I'm telling you that's happening without a shadow of a doubt. Kai, the real question is, how can we prepare for tax changes that will hammer landlords? Someone needs to pay this tax bill, and we know they will come for landlords. No, this is where it's not true. The reason why landlords are getting heavily taxed right now is because so many landlords, as in accidental landlords or people who have one or two properties, were not declaring on their tax returns or even doing tax returns to say that they were paying tax. That's why the government turned around and said, well, so many people are avoiding paying their taxes by not declaring that they're a landlord. So what we're going to do is we're going to tax them heavily to force people to then start buying property in a limited company, where the government have got eyeballs on the limited company to know. So the funny thing is, everybody thinks that our landlords landlords are getting taken advantage of with all the tax, which it is to a certain extent. I don't agree on it, but the reality is landlords caused it themselves by not declaring in the first place. So that's our own faults, not mine, but many amateur people who own one or two properties weren't declaring, which make up like 90% of all the landlords are people that only own one or two properties. So keep that in mind. You know, so the real question, how can we prepare for tax? Get a good fucking tax advisor that can show you how to mitigate tax. Simple shit, guys. Simple shit. You know, Reeve, you don't think Q4 will be negative because the loss of jobs and stopping of furlough? Not necessarily, because remember, you know, we're only having, Q2 was only negative because of COVID and the lockdown. The only way we're going to see Q4 show negative growth is if there's more local lockdowns or a full-scale lockdown, you know, or the economy doesn't spend as much right now, but we're already up 8%, you know, from Q2. We're already risen by 8%, and that's still increasing, and we're still in a phased approach. And normally, the time of the year where more spending happens is Q4 with Christmas and things. So I don't see negativity unless there's another lockdowns and so forth. There's a few comments in there that I'm not sure what you're talking about. Nadeem, do you pass on deals to your own investors from your DP graduates? Also, maximum loan to values, are you leveraging yourself in the morning? Do you pass on deals to your own investors from your... I'm not sure what you mean there, Nadeem. No, I don't pass on deals to my own investors because I teach you how to become self-sufficient so you don't need me, so you can go and do this all yourself. Why would I teach you to be dependent on someone? That if someone teaches you something to be dependent on them, they've not really done a good job in teaching you how to be, you know, independent and be self-sufficient. So I teach you how to find your own investors, how to source your own deals, how to go out there and build your own business, and I give you all the support to do that. What's the maximum loan to value you're leveraging yourself at the moment? I'm buying a lot of cash, but some of our bigger deals, 75% loan to value normally. David, rob a bank, sure. David, EMV, sorry, I'm new to this. EMV means end market value, which James has just touched on. David, I may have missed any time you have spoken about off-market selling. Where would I look for off-market selling? This is where you do your own marketing, all right? Things that you would do to target off-market sellers. I teach all this stuff on our Property Protege program. If anybody's interested in that, go and check it out. It's propertyprotege.com. Check out and see what we're doing. I've got a lot of proteges in here as well, which are, you know, you can reach out and see. Jonathan, great live, Paul. See you next time. Yep, I'll be on same time, 8 p.m. next Thursday. Lorraine, simple shit. Kirk, just a thought, but what about if this big recession comes and a significant number of tenants lose their jobs and they can't afford to pay rent? Great question, Kirk. Well, here's the thing. My tenants that I focus on, 95% of my tenants are housing benefit. I'm not afraid of housing benefit. I think they're better tenants than most private tenants. So from my point of view, you know, if a housing benefit tenant misses 1 month's rent, your letting agent can request from the housing benefit to pay rent direct. So from that point of view, you've got nothing to worry about if you've got housing benefit tenants. If you've got private tenants and they lose their rent and so forth, lose their job and so forth, then of course they're going to be in effect and you're going to need to evict them and then probably want to get a housing benefit tenant in place. Kai, in terms of interest-only mortgage, is there an assumption that after the mortgage term, the properties will have went up in value? How can we eliminate a negative equity mortgage? No, that's why lenders give you want you to put 25% in, Kai, and then they give you the mortgage term over 30 years, 25 or 30 years. So not only do you have to put 25% in, but over 30 years, let's say you buy a property at 100,000, the lender gives you 75, you put 25 in, and let's say in 30 years' time, you've only done interest only. In 30 years' time, that property is only worth £100,000, the same as it was worth 30 years prior to then. You sell the property, the mortgage is paid off, and you've still made your £25,000 equity back. Let's say in 30 years from now, it's only worth 75 grand, so it's actually dropped 25%. You can still pay off the interest and the mortgage, it's just your equity that disappears. That stuff is Again, I'm going to say it, simple shit. You know, and it's something that you're concerned and worried about. I get the impression, Kai, with your questions, correct me if I'm wrong, I'm just saying this from the heart here, that you've maybe not got started doing things and you've got far too many questions that's stopping you and giving you paralysis from taking action. It's about time you stop creating things that's holding you back with all these questions and start taking action. I might have picked you up wrong here. Forgive me if I have, but some of your questions here are questions that I commonly get from people who are too afraid to pull the trigger and do something because you're coming up with things that are just a non-problem. It's just a non-problem. Kai, when is the last property protege session being held this year? Any in November or December? Kai, there's a couple in November. There'll be none in December. Why? Because I hope we're not in lockdown, because I'm going to be flying to Costa Rica for the whole month of December and January. Okay, I'm just scrolling through here. It's all in the Jumpstart book. Lorraine, yes, go and get Property Jumpstart, the book. Kai, I'm eager to learn, Paul. I want to start Protege. Listen, awesome, Kai. Awesome. Listen, I'm great. I love that you're asking the questions, and I'd love to support you. So the dates, I don't know the dates off the top of my mind. The best thing I recommend that you do is go to propertyprotege.com, watch the video there, schedule in a call with my team, and they'll tell you the dates and all that kind of stuff. Do we have finance options? There is a finance option, but you got to qualify, but the team will discuss that with you. So book in a call, go to propertyprotege.com, and they'll do that. Lorraine saying, read the Jumpstart book, Kai, really informative. Yep, you can get the book for free. Just pay the postage packaging by going to propertyjumpstartbook.com. Okay, I'm going to finish up with the last question. Since Alexa's not arrived yet, I'll take one or two more questions. Dean, with intercompany loans, do they count as a cost for the limited company? Purchasing a property when working out the tax you'll pay? No, you don't pay tax on loans. You don't pay tax on a loan. All right, so keep that in mind.